guys, welcome back to a brand new video. I'm RexFinance, and today I'm going to be discussing my number one stock pick for the year of 2022. Now, as I say this, I never invest for a 1-year time span, and in fact, this stock I'm talking about today is a 5 to 7 year hold for me at a minimum. So there's no going out and buying a bunch of Lamborghinis after year one. I mean, you probably could afford the Hot Wheels Lamborghinis, but not the real Lamborghinis. But this stock I'm talking about today really excites me. Today it's trading at around $10 per share, and by 2025, I believe it will hit $50 per share, and then thereafter, I believe it has a very strong chance of hitting over $100 per share. Also, the industry that this company is involved with is growing at 24% compounded annually through the year 2030. And outside of the electric vehicle industry, you would be extremely hard-pressed to find another industry growing as fast as this one is. In fact, the electric vehicle industry actually directly feeds into this industry. So as long as the adoption of electric vehicles continues to grow at exponential rates, this stock should perform very, very well for investors. So enough blathering, what exactly am I talking about? Well, I'm talking about the battery recycling industry. And for the most part, I'll let you in on a little bit of a secret, so don't tell anybody. I know there's like thousands of people watching this video, but don't tell anybody. This industry is pretty much undiscovered, which means this stock is pretty much undiscovered as well. And as a result of that, I think you can pick up shares of this company for an extremely attractive valuation. But before I give you the exact ticker symbol for the stock I'm talking about today, I have to get the boring stuff out of the way quickly. First of all, if you guys are new here or returning not yet subscribed, I would greatly appreciate you hitting that subscribe button down below. Also, feel free to drop a comment of a ticker symbol that you believe is going to perform greatly for investors over the coming decade. Again, just to review, despite this being my number one stock pick for 2022, this is likely a 5 to 10 year investment horizon for me with this stock. But now, with all of that garbage out of the way, the stock I'm talking about today is LICY, ticker symbol LICY. And there are just so many different reasons I am extremely excited about both this company and this industry going into the next decade. But it all starts with the fact that in the past, battery recycling hasn't been an option for people that want to dispose of batteries. In fact, companies would actually pay dumping fees to other companies to dispose of their used batteries, which doesn't make much sense to me because even after you've used the battery, it still has quite a bit of useful life in it. And to take this even a little bit further, when you dispose of batteries, you're also disposing of highly sought after materials, chemicals, compounds, and minerals that could be recycled and reused in making new batteries. Instead, you're putting them to waste and disposing of them when the supply of them is low already. It just makes no sense to me. And thankfully, the management team at LICY saw this issue in 2015 and founded the company LICY in 2016. And just now, they are officially reaching the stage as a company where they are scaling up big time and their revenues are going to grow like crazy. 2021 was basically the first year that this company had any revenue whatsoever. In the years preceding 2021, the management team was doing lots of feasibility testing, developing their technology, which by the way is best in class, best in the industry. I'll get into that in today's video. But they also spent time trying to identify good locations for their facilities and just researching the overall industry. And when they originally founded this company, the management team was told that they were too early. And guess what has happened? LICY, LICY, has become North America's number one lithium-ion battery recycling company. And better yet, since this management team got a head start on this industry and they saw the opportunity, they're also multiple years ahead of the competition. Think about Tesla. That's another example of a company that is multiple years ahead of the competition. And right now, as I've stated, I feel you can get a very attractive valuation for this business. LICY just recently went public in 2021, which I already mentioned was their first revenue year for the company. But beyond that, going public allowed them to raise over $500 million. That is enough money to fully build out their business plan. And better yet, I'll go through some press releases, but some very key names are investing in LICY, giving them cash to grow their business. Anyways, now let's give you guys some quick numbers. Last year in 2021, they did around $12 million in revenue. And when you first look at the valuation, you're paying over $1 billion for a company that did just $12 million in revenue last year. You might get some question marks going on in your head. But why this is so exciting to me is within 5 years, this company is going to be over $1 billion in revenue. They currently project they'll have $958 million in revenue in 2025, but I think that's going to be well over $1 billion thanks to a recent press release that they just released to the public, which I will go over next. But this current valuation gets even more exciting to me when I look at the EBITDA projected by the management team. For example, by 2025, the year where I believe they're going to be well over $1 billion in revenue, they project 56% EBITDA margin, which is incredible. That means that in 2025, this company's earnings before interest, tax, depreciation, and amortization is going to be over $500 million. Probably the most useful valuation metric is the PE ratio, or the share price divided by the earnings of the company. And if you take that valuation metric into account, I'll let you do the math on your own. You can see why I feel that a 5x in the share price is pretty reasonable between here and 2025 based on the earnings of this company. Now, as is the case with any company that's set to grow this fast, there are some risks which I'm going to address now. For example, we have execution risk. There's always a risk that the management team isn't going to scale up as quickly as they project they are going to. Another risk we have with this stock is regulatory risk. For example, if the government quit giving out subsidies for purchasing electric vehicles, that would probably hurt this business model, because going into the future, although it's not a big piece of their revenue right now, the recycling of electric vehicle batteries is going to be a big piece of their revenue sometime within the next decade. And right now, the government is pushing electric vehicles like crazy, but if for some reason they take their foot off the accelerator and they stop giving out the subsidies and all these benefits for purchasing those vehicles, it could very well hurt this business model. Another risk we have with this stock, since the industry is so young, is technology risk. For example, new types of batteries are going to be created. And will these materials and minerals and chemicals and compounds still be needed in those new types of batteries? Will this recycling still be applicable and feasible for life cycle long term as new types of batteries are created? That remains to be seen. And then lastly, because this is a business-to-business business model, that was a lot of businesses, we have customer concentration risk. It's natural. Anytime you're in the business-to-business market, you don't have as many customers. And if one of your big customers falls off or cancels their contract, you could be scrambling. But now that I've laid out all the risks that I have contemplated with this investment, I'm going to go through why I am not concerned about these risks. Let's start with the execution risk. What are the odds that the management team is not going to grow the business as big as they want to, as fast as they are projecting? Personally, I see this as non-existent. This risk is non-existent because just recently, just a few weeks ago, they gave us news that they're actually going to upsize their facility that they had originally planned for New York. This is big news. This tells you that demand is probably higher than they thought originally as they planned out their business model. And they're going to upsize their first hub. And along with the fact they are upsizing their capacity at their first hub facility, they have their customers directly investing into them. They are going to have plenty of cash. I already reviewed that after they went public, they raised over $500 million via that public offering, which already was enough to fully build out their planned business model through 2025. And all the more cash they get just means they can build out quicker and quicker, faster and faster, and bigger. We see here that LG is going to make a $50 million equity investment into LICY upon completion of their commercial agreements. This is absolutely huge. LG, if you guys aren't aware, is actually the battery manufacturing arm of General Motors. They have an entire contract with LG, and LG is directly investing $50 million into LICY. LICY has basically developed a closed-loop economy with LG. Basically, LG is going to supply them the batteries to recycle, LICY is going to recycle those batteries, and then LICY is going to sell each of those individual minerals back to LG to put into their new batteries that they're going to build. It's a closed-loop economy, and the more and more of these closed-loop economies they can build around their business model, the more and more less I worry about the execution risk. And if we can get even more customers to directly invest into LiCycle, that's better, because if they're directly invested into LiCycle, they have less incentive to cancel out of their contracts because they want LiCycle to exceed so they can get a good return on their original investment. On the screen now is just yet another reason I'm not concerned about the execution risk, because LiCycle recently again announced a $100 million investment from Koch Strategic Platforms. That is a very, very large business, and they directly invested $100 million into LiCycle. The more and more cash they can get, the better and better off they will be, and they have had no issues securing the cash they need, and better yet, the government likely is going to be giving them some credits, which basically is free money to build out their business even quicker and even bigger. And if by chance you are still concerned about this execution risk, their recent hire, Debbie Simpson, as Chief Financial Officer is a big hire, because Debbie Simpson has a history of securing very, very favorable debt. So if they need more debt to finance their business operations and their business build out, Debbie Simpson has great history at doing so. Really quickly, I just want to highlight one other closed loop economy that LiCycle has built with one of its customers. In this case, it's Arrival, which is actually a pretty popular company on the NASDAQ exchange. Outside of the closed loop economy, Arrival will also be able to help LiCycle ensure that their recycling technologies are still feasible and applicable with any new battery type that's created. One last note on the execution risk, LiCycle has consistently met their timelines. This isn't a management team that messes around and misses their deadlines. They have stuck to it, and I've followed this company for almost a year now, which is kind of crazy. All right, so the second risk that I mentioned is regulatory risk, and this isn't going to take long for me to cover. Regulatory risk, it's there, but it's very, very unlikely to happen. There is a very, 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 very small chance that the government is going to stop providing subsidies for the adoption of electric vehicles. It's just very likely not going to happen. The third risk that I mentioned is actually kind of a big risk, which is the technology risk. Basically, will their technologies continue to be feasible as new battery types are made and manufactured? I've actually had LiCycle's management team on this YouTube channel. If you want to go see the interview, hit the on the top right-hand corner or hit the link in the description down below. But the management team basically thinks that no matter how much batteries are adapted or changed, there's still going to be lithium components to the batteries, so their recycling is going to be feasible and sustainable long term. But also they told me that their recycling technology still works with all these new prototypes that they've tested. The fourth risk I mentioned was customer concentration risk. There's not much the company can do about this just because it's a business-to-business business model. But just an example of this, Traxys is contracted to offtake 100% of end products from the North America commercial hub. And if for some reason Traxys would cancel out of that contract or that agreement, then LiCycle might be scrambling to find a buyer for their materials or minerals. First of all, the odds that Traxys cancels this agreement are very low because Traxys is a large investor into LiCycle. They were a part of this SPAC merger. But second of all, these minerals, chemicals, compounds, whatever you want to call them, they're going to be in demand, and if Traxys isn't there to buy them, somebody will be there to buy them just because the supply is so low and the demand is so high. So customer concentration risk, although there's not much you can do about it, it's really not a big concern to me. Really quickly now, I just want to mention one last risk, and it's actually a date that I want you guys to keep an eye on. It is the lockup expiration date. Basically, what's going to happen is as the lockup expires, the insiders of the company, the insiders of the SPAC are going to be able to sell out of their investment, sell shares on the open market, basically cash out of some of their investment and take some gains on all of the hard work they've done to build the company thus far. I really don't anticipate this management team selling out of that many shares, but it's always possible. But the lockup expiration date is February 7th, and then the second lockup expiration, which is their sponsor lockup expiration date, is August 10th, as long as the LiCycle stock doesn't trade at above $12 per share for 20 days out of any 30-day time span. So that's a little bit complicated, but just keep in mind February 7th and August 10th, unless LiCycle's stock price absolutely takes off. But now with all of that out of the way, I know this is going to be a little bit longer of a video, but I feel like I should explain this business model and LiCycle's technologies so you at least have an idea of what you might be investing into. First, let's start with LiCycle's technology and how it's superior to the other forms of battery recycling. LiCycle operates a spoke and hub business model where they have spokes and then they have hubs. The spokes basically shred down the batteries into a black mass. And in the future, after the first hub is built in New York, which is that same hub that is going to be upsizing, they will transport that black mass from their spokes to that hub, and then the hub is going to break down the black mass into minerals and chemicals and compounds that are in high demand for new batteries to be manufactured. The 3 battery grade materials that I have written down are lithium carbonate, nickel sulfate, and cobalt sulfate. And just to review, those materials will be sold back to the battery manufacturers through Traxys, who is their offtake partner. Currently, this company has 2 spokes up and operational, with 2 additional planned. The 2 that are up and operational are located in Kingston, Canada, and Rochester, New York, and the other 2 that are planned for Alabama and Arizona. Essentially electric vehicle hotbeds. They just started construction on their first hub, which is in New York, as I already mentioned, and is going to be upsized. But since they don't have an existing hub, you may be wondering what happens to the black mass that they are creating via their spokes, because they can't transport to their hub because the hub doesn't exist. Well, it turns out that the black mass is actually in pretty high demand too. So right now, as it stands, they're turning around and selling their black mass to third parties, and they're not breaking it down into those individual materials that are needed for battery manufacturing. But as soon as their first hub is up and operational, which is planned for 2023, they will be breaking down the black mass into those individual materials and selling those individual materials back to the original battery manufacturers, which is going to scale up their revenue numbers tremendously. Most other battery recycling companies out there use the smelting or thermal pretreatment plus refining method, not the LICY spoken hub technologies, which is a lot easier to say. But beyond that, the recycling efficiency rate, which is defined as the mass exiting the process and returning to the economy, divided by the battery material mass entering the process times 100%, that was a mouthful, equals up to 95% using LICY's technologies. And again, most of the industry right now is using smelting or thermal processes, which only gets you equal to or less than 50% recycling efficiency rate. And then cathode to cathode, I don't know much about it, but that's only about 30% recycling efficiency rate, which might explain why it's not a very popular method. But let's just go ahead and go down this list. Battery chemistry and charge agnostic. Well, LICY's technologies, bingo. The rest of them, no. Non-thermal zero impact air emissions, LICY's technologies, bingo. Other technologies, nada. No landfill waste or wastewater, LICY, bingo again. Other technologies, no way, Jose. Minimal human operating risk, LICY, booyah. Other technologies, absolutely not, because smelting and thermal is very dangerous. Future-proofed, as I've already mentioned, bingo for LICY and nada for these other technologies. Because again, batteries are going to continue to be adapted and improved, but LICY's technologies have proven to be applicable and sustainable for any future type of battery that is made. So basically, all in all, what we have here is a more environmentally friendly, more efficient, more effective, more safe, cheaper, and more feasible method of recycling batteries. And believe it or not, this is also cheaper, more environmentally friendly, more effective, more efficient, more feasible, all of those things than traditional mining for all of these individual materials that you need to manufacture batteries. So this technology, it just makes sense, right? It just makes absolute sense. Right now, LICY's plan is to have 20 spokes up and operational and 4 hubs up and operational globally by 2025. That is tremendous growth considering we only have 2 spokes operational currently. But, you know, as you build more and more of something, you get more and more efficient and you get quicker at doing so. So I think they'll be able to meet these deadlines and these projections and these guidelines. But anyways, I'm going to leave this video here. If you guys enjoyed this, feel free to hit that like button down below. This is going to be a big investment for me going into the next 5 and even 10 years. We'll see what happens. But right now, this technology looks very promising. This valuation looks very attractive. And I'm putting my chips where I need them to be in order to profit tremendously off of this investment. With that, guys, I hope you enjoyed this. Have a great rest of your day. I'll be back with a brand new video next week. Peace out.